And you'll pick up the slides, right? On this.
I think you can pick up. It'll be better if you navigate.
Okay. Okay. Let me do that then before we share with anybody else. And you'll pick up the slides, right? On the.
So Anil, we are actually live. You can pick up. It'll be better if you navigate.
Okay. Let me see this. Okay.
So we are live, Anil, and it's 9 p.m. PT, 9:30 a.m. IST. So right on time. Hi guys. We will not delay any further, wait any further. People who've joined in, welcome. And we are sure that more people will keep tuning in to what promises to be a really, really riveting session. Let me start with a round of introductions. My name is Srinivasan Narayan. I am the co-founder and CEO of the Good Meetings platform. Don't worry, we are not going to talk a lot about good meetings here. We are going to talk about something which is, which is more exciting, I would say. So anyways, by way of introduction, Good Meetings is an online video platform that helps sales guys sell 10x better on video. We basically, kind of record your calls, transcribe your calls. We basically capture useful insights from those calls. We summarize your calls. We extract the main discussion points. We automate your workflows by pushing it back to the CRM, by automating a lot of your tasks on the CRM, and therefore basically saving a lot of time for your team, that time that you can use to do something more productive, right? You can check us out on goodmeetings.ai. We have a bunch of, top clients, and I can really proudly say that one of them is Inventus and Anil Advani. But that's the kind of self-promotion that I'll only do. And beyond that, we will talk about the topic at hand. So that was something about me and about my company, Good Meetings. Today, I have a very, very special guest with me, someone who's a very close friend, a friend, philosopher, and guide. But more importantly, one of the, most seasoned, most experienced startup lawyers that I've ever come across. And the way, I kind of introduce him is very simple, right? There are very, very few professionals in this world who can be defined by a single word, right? For example, if you talk about basketball, all of us will, kind of think about what? Michael Jordan, right? If you talk about Indian cricket, all of us would think about Sachin Tendulkar. If you ever think, and I'm sure a lot of people here, because they belong to the startup ecosystem, if you ever think about startups and legalities, the only name that probably comes to your mind, right, is Anil Advani. So that's how I like to define Anil, someone who's an institution as far as startups and legalities are concerned, not just with regards to, the India-US product corridor, where obviously he and his team have some stellar expertise and have done some stupendous jobs, but generally as one of the best legal counsels that you can ever have. Welcome to the session, Anil. It is really, really, exciting, and we're really privileged to have you here.
Thank you, Shini. And I knew it was the right decision to let you introduce me. I could not have done a better job or exaggerated the way you did. So I appreciate all that.
I have not exaggerated it, Anil. I've only spoken the truth because, you and me have met so many times. Every time I meet you, I go back slightly more enlightened, slightly more, educated. And one of the most complex things that I have undergone in my entrepreneurial career is, building a cross-border company and having a fairly complex company structure because of that. And you've helped me from time to time on that. So it was only natural for me to, kind of host this session with you. We've hosted a lot of sessions around product. We've hosted a lot of sessions around go-to-market strategies. And we also know that, while those are very, very important topics, there is also sufficient literature online, right? But this was one topic that is very, very close to my heart, because I know that, almost every founder who's trying to build a global company, today faces this at some level or the other, right? And, because of various reasons, be it, constantly changing government regulations, be it fairly complex tax structures, be it difference in regulations in the different countries that you operate, this ends up becoming, more of a challenge than a really, pleasurable activity. And that's where, seasoned folks like you come and help us out. So I thought it was very important to have this session. It's a unique session in many ways because it's the first time we are doing a session where we are going to discuss legalities, tax, compliances, etc., etc. But I do understand that that is one aspect which, in the whole path of building a great company sometimes gets ignored. But very, very unfortunately, it can come back to bite you really badly later. So it's very important that, founders understand how to structure their company properly. And that's why I think this will end up being one of the most power packed and informative sessions of Road to SaaS. So welcome again, Anil.
Thanks again, Shrini, and I guess no pressure on me to be Michael Jordan here. But in any case, let's get started. I thought, when we had this initial discussion, I thought it would be useful to talk about something that's even more pertinent to founders than the legal and tax issues. And it's sort of related. And Shrini, I mean, I've worked with thousands of startups, and I will tell you what you said is exactly right, that founders, they're always focused on, and rightly so, building the product, because without the product, you have nothing, right? I mean, especially SaaS founders. Building the team, running after investors. When you go to a conference, nobody's looking for the legal panel, right? Everyone's looking for the investor panel. Where is the money? Where are they investing? Getting their business cards, shaking hands, taking pictures. Nobody comes to me. Well, they sometimes do. You do, then some of my clients do. But, VCs are the main stars, which again, they're the ones putting money. And in fact, they're stars for us. How we get paid because, they invest in our startup clients. But what you said is absolutely right, that, founders tend to ignore the legal issues. And it's a natural sort of, inclination that we can take care of it in the future. And that can have some significant consequences. The way I sort of also explain that to get attention from the founders is that, you're building the company, and obviously the odds are against you. As hopefully everyone on this call understands that the odds are against you. It's not coming as a surprise or a shock. So the least you can do is that if everything goes well, you worked hard, the technology works, you're able to raise funding, build the team, get the customers, keep building, scaling. The last thing you want is that to walk away and say, I built a successful company, but I didn't make money, right? And one of the reasons you could end up doing that is because you weren't paying attention to this little guy with no money, but a lot of experience that could have helped you, right, in that respect. So that's really, it's like building a beautiful house, importing, marble from Italy and all the good stuff, chandeliers from wherever else you get great chandeliers from, all of that, and forgetting to build a strong basement, right? So the legal issues, what we do working with founders is really building a very strong basement. Based on which you can put out your chandeliers, bring the marble, make a shiny house, and hopefully sell it for a lot of money and create wealth for everyone. So that's really the simple way to explain it. Obviously, founders that have gone through these experiences have learned, and again, the best way to learn is from your own mistakes, but preferably from other people's mistakes. And one of my jobs is to really, so that's why I thought that instead of talking about legal, and I've made a lot of presentation on legal structures, compliances, tax, and I'm happy to share with the audience and certainly do another session if needed, or for a one-on-one if there are real issues that people are facing, and particularly on this call, if they want to ask questions, I'm happy to answer. But I thought this is somewhat different that I've not done before. And it's a very simple presentation with just a handful of slides, which is really the mistakes founders make. And this is not, I don't have to wear my legal hat to talk about mistakes founders make, but as a lawyer, we are again in a very unique position, right? We are working with the founders are working with the investors, but then we are working with the investors. We're right in the middle of that relationship. You're working with customers. We're also helping you work with the customers. So we see all of that, what you're doing. You are trying to come into the US and working on your immigration. And even though I don't do immigration, I'm usually on a phone call with the immigration lawyer on behalf of my clients, understanding, facilitating that process. So we see the 360 degrees of a founder's lives. I unfortunately see a lot more than that. I also help where you live, where you rent your car, where you want to shop for groceries, Indian stores, all of that, right? And we get involved in that business. So in the business of just building the company here. And all of those are intangibles. You couldn't put a number to it. You couldn't put a price to it. You could not, I could never say that because of me, a startup at X amount of value, because it's not tangible. I can't explain it in monetary terms, but it helps take away the stress that otherwise founders would have, a lot of the energy. So founders that, we work with, and we'll talk about the first slide, the mistakes founders make. Well, why don't we just go into that and I can speak about that. So the biggest, like, for example, a number of times when we start working with founders, we realize that they when they come to us, they should have come to us 6 months, 12 months, maybe sometimes 2-3 years ago, before they did. And it surprises me because I am doing my bit. I've been, for people who are not, I guess most people on this audience probably not old enough, but I've been practicing law for 25 years and I've been doing the India-US, whatever it was, India-US 20 years ago, since 2000. And certainly since 2009, you can even go online and check my videos on 2009, preaching the same thing that I'm preaching today, which is that if your market is in the US, if your growth will be in the US, most likely your investors will come from the US, and you need to be starting out as a US corporation from day one. And as I said, it just boggles my mind that despite my best efforts, and I'm very biased, right? I drink the Kool-Aid here. Obviously, it's good business for me. So I'll disclaim all of that. But it's just something that I've seen work, right? And as founders, the other thing you have to keep in mind is, with all the odds against you, you have to give yourself the biggest challenge, opportunity for success. And then in order to do that, you have to remove the roadblocks. In order to remove the roadblocks, the simplest way is to say, hey, what is successful? What has been done before, right? You can be creative in your product, your features, targeting an emerging market, and be the first try to get a first mover advantage. All of the creativity and talent comes in there. When it comes to legal structuring, it's been done before. Why reinvent or try to reinvent the wheel? Why create roadblocks for your own success by going, in Hindi, there's a kahawat, you can naak yahan se pakad sakte ho or yahan se pakad sakte ho. So why are you trying to do this when this is the straightest, simplest way to do it? But again, it boggles my mind that when we start working with founders, the number one mistake I feel, and again, this is all about India-US structure, is, and I have a whole longer list of mistakes founders make, generally speaking, and I'll delve into that or answer any questions if people have about, how to hire advisors, for example, how to divvy up equity. All of those we can talk about, but that's not the core part of this discussion today. As I said, I'm happy to take questions on those subjects as well offline as part of this discussion. So the biggest mistake is not understanding where your market is. And sometimes it comes to laziness, complete laziness. I'll give not to get too distracted, and I'll make it quick. This is around literally 2009. So 14 years ago, a friend of mine was starting a company. He invited me to Bangalore. And, at that point, I was friends with a lot of the founders, and they would invite me to Bangalore, had nice single malt. Single malt was a big thing. Now it's Japanese, bourbon, different. But at that point, single malt was a big thing for, drinking in Bangalore. I go to his house, we break out the single malt, and he puts his feet on the stool in the chair, and right away from the corner of my eye, the servant comes out, takes his shoes off, takes his socks off, starts putting oil, like that cream, and start massaging his feet. And he's like obviously embarrassed because this happens probably every night and it's happening in front of me. He didn't expect that. So he said, no, chale jao. But you realize that, the kind of life you live in Bangalore, it is very difficult to give that up. That's an extreme. Obviously, hopefully not all the founders on this call have the luxury of something that lifestyle, but it's also the laziness, right? In the sense of the lifestyle that you're used to. And that's the flip side of it is, if you are going to make a decision, then you have to allocate your brain power, your personal, emotional, all of those energies and investments you have to make and be ready to make, right? So you can't come to the US. Fortunately, unfortunately, you just can't say that, hey, I'm not going to do my dishes, or I'm not doing this, I'm not running chores. You have to allocate a significant part of not significant, but some part of your time and energy. Obviously, no, I'm here. There now, in 2023, there are hundreds and hundreds of founders who've made this trip, who can help make it easier for you, right? But you have to be able to be ready for it. So in any case, going back to the timing, it's very difficult if you have raised money or I've started in operations in India, filed patents in India, there is RBI regulations that requires that if you are moving IP from India to, and I'll just say US, but it applies if you're going to Singapore, Dubai, wherever else, same issues apply. Hopefully, if you're a SaaS company, you've determined that Singapore, Dubai, Malaysia, wherever, Cayman are not the right jurisdiction. Delaware is the right jurisdiction. So I'll just assume we're talking about, when I say going out of India, we're talking about Delaware. But if you've decided that, then that from day one should be where you're structuring your legal structure, your IP, right? It becomes very difficult if you have a patent in India, because RBI regulations require that if you are transferring that patent from India to US, then it has to be quote unquote market price, market value under the RBI norms. And guess what? I mean, there is no such thing as an RBI norm for valuations. It goes into, depending on which CA you work with, which CA, what comfort level they have with the RBI. And we had one case, again, I'm not naming names, but this was again a few years ago, where they sold to Facebook actually. And Facebook got a letter from the Indian tax authorities claiming that it was integrated into the Facebook product when it used to be Facebook, I guess. It was that IP sold from India was integrated into the Facebook product. Facebook had X billion of revenues and therefore owed X amount of money based on those global revenues to Indian authorities. And go figure, right? And Facebook had to argue and try to fight. And at one point, I remember the main M&A person for global operations, global expansion told me, Anil, and this is a deal that we represent the company on. He told me very clearly, Anil, we are never going to do another acquisition in India, right? And I don't know if they've done it, I haven't followed, but that rang a very sort of strong bell in my mind that we have to be so careful. Founders have to be so careful, because keep in mind, when you're in the middle of that transaction, you're not going to get paid unless Facebook is happy or your US acquirer is happy that all of that is set up. They're not going to take the liability. And they're all very concerned about how these things are structured. So even if you ignore it, which you shouldn't, you will have consequences. But somewhere along the line, your first VC investor and certainly an acquirer will have lots of concerns about how this was set up initially. And if you were not set up, it's like setting up a basement. When you're selling your house, and the first thing anyone does is do a property review, right? Inspection. And if the inspector says that the house looks great, the marble is great, shiny, beautiful, but guess what? The basement is leaking. No one's going to buy your house, right? I mean, that's really, think about that as your legal structure that you're building the house on, to use that, to continue to use that analogy.
Anil,
Yeah.
this is actually very interesting. But I'll tell you, I'll tell you from an entrepreneur's perspective, because I've gone through that multiple times, right? As a seasoned entrepreneur. I understand what you say, that as an entrepreneur, it is super important for you to understand where your market is. And please incorporate your company in where your market is, not where you're staying currently, right? My question to you is the following, right? I think what happens is many entrepreneurs get bogged down because they probably start getting initial investments from investors, right? Who are actually in their home country right now.
Mhm.
And, many of them are AIFs, right, etc. And therefore, getting an AIF to actually invest in an overseas entity is non-trivial, right? So what do you advise those entrepreneurs? Because I've seen this happening many times, right? I've seen so many entrepreneurs saying, hey, you know what? We will fix it in the future. Currently, I'm getting the money. Let me just grab that money with both my hands. And because there are some AIFs or some angels who are interested and they can't directly invest in an overseas entity. So let me just take the money now. Otherwise, I will not even survive to, kind of see the next day where I can flip the company, etc., etc. So what are your thoughts on that? Because that entrepreneur comes from a slightly different perspective, right? Where he or she is basically feeling that let me just grab all the money that is up for grabs on the table, and whatever it takes, I'll just take the money and then I'll clean up the mess tomorrow.
Yes. You raise a very good point, and it'll be it happens more often than you like to think it does. And I'll be brutally honest. I have very little sympathy for founders on a personal level, right? Because nobody's forcing you to do it, right? Nobody's saying give up your job and start a company. So you get zero right to complain. I've been an entrepreneur. I left my big firm. I struggle. There was a time when I wanted to save $150 for my charging cable. So I would carry it from my house to the office, then cable it back. So I didn't want to buy another one for the office. I mean, and you all are working hard. So I'm not diminishing any of the hard work you guys do, and which is why I'm able to relate to it. But this is an area I do empathize, right? So it is a hard and a rock place, rock and a hard place. So it is something that I understand, right? If it's existential, right? If you have no money, no other options, and without this, you don't have a startup, then you have to do what you have to do in sort of, so I understand that. I think in that also as a founder, you need to do your homework, right? Figure out what kind of structure will allow the AIF, but still in a US company. We've created a structure that we talk about now. My partner, Ashita, she's done a number of these. We presented to IBCA, where we can still create a US company with IP in the US, everything else, and the AIFs investing in India. So that structure does work. I think the key part is, and we'll talk about that as we get into it, key part is finding the right partner, right? And even if you end up with money in the Indian company because of those reasons, let's make sure that the investors are your partners. They're not doing it because they want to force you into doing it, right? So again, not to talk about, not to get distracted, but I once had a couple of founders, YC company, they told me that their angel investor, right, was requiring that YC used to get 6%, whatever they got for very little sort of cash investment because it was YC. And he said that because you've gone to YC, those are the terms. He had got them to sign a pro rata right, and he wanted the same rights as YC at that point. And he said, if you don't, I'm going to tell the whole ecosystem. He sent emails threatening them, right? So that goes into, so to answer your question, yes, I sympathize. If that's what you have to do, you do that because you have to survive and live to another day and then figure it out. But even in that, make sure you're working with the right partner that is going to be supportive of your success and or willing to step back, right? So many times in those structures, my first question to the founder is, what do you want to do with the angel, right? If you have an India structure, we have to flip over. What do you want to do with the angel? Is the angel supportive of this? Otherwise, we need to find a way to buy that angel out. In that instance, the founders put me in front and said, we are scared of him, go and talk. And someone I know. So I sat down with him and got into a little bit of a tussle. And we agreed on a price for him to just get out the cap table because he was clearly not going to be a long-term prospect, right? But again, I will never do that again because it affected my relationship with him. And also as a lawyer, that's not my role to be threatening angel investors. That's your role, right? Not threatening, but your role to find the right angels to work with. So I would say if you have to do it, but make sure you find the right investors. And that is, even if it's not in India, US, at any time, any investor you're bringing in, don't just look at the money, look at also what they bring to the table and certainly how negative or toxic they can be in that relationship, right? So be careful about that in any case. When it comes to the structuring and the complications, then obviously that concern is even more amplified. So again, if the investor is genuinely interested in supporting, there are legal issues with AIS because of which they're not able to invest. I understand that. We'll find ways to work with them, find solutions. But you cannot make my job harder by coming on with angels that are completely, and it's all over. You can easily find out who those angels are, who the investment funds are, right? So that's something that you have to do your homework on initially.
Makes sense.
As I said, starting with the wrong structure, it's related to making the mistake. You have to be a US parent, and I'll go into the structure but again, on the other hand, I'm assuming all of these people on the call all the founders are SaaS founders. But if you're not, if you have a consumer business that's focused on Asia Pacific, then being a Singapore company is probably a good idea because your investors likely to come from Asia Pacific. Your market, your IP will likely be licensed or used or platform, whatever it is. E-commerce businesses will be structured globally, not globally, but on the Asia Pacific side. That makes sense. If you are I used to say when I started, if you're a Shadi.com, which is a purely Indian sort of focused business, then you should be an India company. There's nothing wrong with being an India company and especially in this market where there is capital available for growth. But again, be careful. But even in those instances, there is capital available for growth, but there are not that many exits. So even if I would say you're an India-focused, consumer-focused business, think about, and that's number one rule before you start. you need to know where it will end. You need to have a plan for an exit. In your mind, it's like the North Star, right? I mean, obviously, you're not just starting for money, but come on, you are, right? So you have to have a North Star on where you are starting, why you're starting, and what is the, with all the intelligence and information you have, what is the likely exit, right? And with all of the information we have, with all the capital markets, investments, everything that's going on in India, there are still not that many great exit opportunities in India, even for consumer goods, as compared to Singapore, even the UK, and certainly the US. So even for those, just make sure you understand where the exit will come from. But if that results in an India holding company, the business in India, that would make sense, right? So go through this chart and make sure where you head up, and then make that decision.
I had one question here, Anil, and this is something that has come up many times in the recent past. So that's why I wanted to bring it up. Yeah. So, we first slide, we spoke about know, where your business is, try to incorporate your company there. The second slide talks more about it, and you speak about the fact that know where you're finally going to make money from, right? How you're going to exit the company, how the company is going to either get sold or get an IPO, etc., right? And have your company incorporated there. And you've given a great structure of, what kind of company should be incorporated where. So that's a very good, kind of handbook for a lot of founders. One thing that I've seen in the recent past is, some companies have, so earlier, many companies used to get incorporated in the US because one of the reasons was it was easier to raise funds because there are more VCs here. It was easier to get an exit. It was easier to IPO, right? Of late, we've had, companies IPOing in India also, and there have been cases, right, of few companies doing what we call a reverse flip, right? They were incorporated in the US, but now they are incorporating in India, right? Because they feel that it's easier to go public in India and stuff, right? My question is, how natural is that? And, do you think that India has come of age? And I'm not asking you to take a, punt or something, but generally your thoughts on the whole reverse flip and many companies beginning to, incorporate themselves in India for various reasons, or you think that we are still a few years away from reaching that goal where India will become a very, very IPO friendly country, and hence more companies will, kind of domicile themselves in India?
Yeah. So, I mean, I don't want to be characterized as a foreigner and attacking
I
India.
understand.
I am as much Indian as anybody else on this, probably more because, I feel an obligation to even give back more than you guys breathing the Indian air every day. And I don't mean that in a bad way at all. So I would say the short answer is, the Databricks is going to go public, and they're expecting the valuation to be $45 billion. And expectation is that at the time of IPO, it'll be maybe north of $100 billion, right? So when you say there are a lot of IPOs in India, the scale is completely different, right? So let's not fool ourselves, right, into thinking that. And I would argue we don't need to. I mean, we don't necessarily. I mean, there's a good thing for everybody. There's a place and space for everything, right? So there is capital markets, very highly developed capital markets in the US. I had a one-on-one with Sitaraman, the finance minister. I asked her, like, we talk about India shining, all of this great stuff. We have to acknowledge it's because of the Indian founders, the technology we create, and also many of the founders that move to the US, build businesses, or build and become CEOs. All the great stuff. Whenever we talk about India shining, we talk about Satya Nadella, all of those guys, right? It wouldn't have happened if they hadn't tried. So you can say patriotic, all that, and don't move, fine. But then you take away a significant part of why India is now a dominant force across the world, which is technology. So and as technology and entrepreneurs, your goal is, like, let's say, the water, right? You have to flow to the easiest exit. So if there's capital markets built in the US, why are you making it yourself difficult to say, no, I will go IPO in India? The markets are not, the scale is different, but also the regulations are different, right? It's still very complicated. The tax regime is still different. We now have angel tax, and everyone on this phone should go and understand how that works. It has scared a lot of the foreign investors. So I would expect, and this is, I'm not making a political statement, but this is a government policy. It's actually going to reverse a lot of the investments that we've seen. Those investments have not panned out as well. Some of these companies valued at $1 billion, in one case, north of $20 billion, the valuations dropped significantly. the amount of diligence, fraud, all, and there's also enough of that in the US, I'll grant you. But investors are more comfortable with someone in their neighborhood doing fraud than someone 10,000 miles doing fraud, just the way it is. So I expect that will go down. But in any case, as a founder, if you have an opportunity, if you have an investment banker that is able to show you a road to IPO in India, absolutely do it, right? But don't do it because Razorpay is flipping back, right? That's not why you should be doing it. Razorpay is flipping back for different reasons. They are an India-focused company. Their revenues are here. They will continue to be taxed in India for every dollar they spend. And I used to advise Razorpay. I don't, so I can disclaim that. They and any other company you're talking about, look at why they are flipping back. A very different reason. Is that even related to you building a SaaS business for the global markets? Most likely not. So again, don't go in blindly following something that doesn't work for you. Understand, do your homework, and then make a decision, right? So when you see IPO markets, which are the IPOs, right? I mean, I can give you a handful of those IPOs, and I can tell you that in Silicon Valley, there's one IPO of that level happening every week, or if not IPO, an exit at that level, 100 million plus exits happening every week, literally. And you can be a very easy part of that by simple structuring, especially if you're a SaaS company. And as you may have seen, Srini, in your travels here, there is a lot of appetite for US investors for technology, SaaS businesses, and customers of investing and growing the business in the US. So that model is now taking shape to a point. It's a no-brainer. It is the established model. Israelis did that really well. Nobody said that Israelis coming into US are not patriotic or that they should be looking at Israeli markets. There's a capital market set up, the compliances, the process for IPO, the lawyers, the tax accountants, reporting, your tax implications, investors, how they make money. Such an easy system, works for 50 years, hundreds of companies going through that process. Why do you want to make it difficult for yourself by trying out something in India that's still a work in progress in much respects?
Makes sense. Very, very informative, Anil.
So this is, I'm sure everyone is aware of this, but I still like to walk through it because this is an image you can walk out with, and whenever you're looking at, where you are. This is the typical structure. This basically gets you to be able to smell, walk, talk like any other Silicon Valley company, right? And you could still be sitting in as part of the India employees at where you are as part of the Indian company. We would create a Delaware C Corp. The Delaware C Corp would create a subsidiary in India. Everyone sitting in India, living in India, founders, employees will become employees of that entity. We typically have a service agreement for SaaS, or IP should be in the US company. The service agreement will provide for terms on which the Indian company will provide services to the US. Most importantly, that all the IP developed in India is assigned and owned by the US. Again, this is important because, as I mentioned, if you show that the IP is owned in India, filed in India, flipping that outside of India becomes a challenge and always subject to potential tax risks in the future. So it's important from day one, all the IPs being developed in India should be documented as being developed in India as a service for the US company. And the US company India should invoice and US company should pay for those service fees. All the employees sitting in India, including founders, should also have employment agreements so that all the work they're doing is assigned to the Indian company as part of their employment and then goes up to the US holding company. You will have your founder stock again in the Delaware company. You will have a global option plan. Employees sitting in India can get options in the US company, just like any other employees in the US. You will raise money, investors, seed investors, your VC investors. That's the company that, as I said, will walk, smell, talk like any other Silicon Valley company. And then boom, you're off to the races. When you present yourself to investors, to customers, there's no reason to say I'm an India company, and there's nothing wrong with saying it, but you just call me, or you say ABC, Inc., a Delaware corporation. When general counsels at large enterprises are doing diligence, they're not worried about IP, how to protect their IP in India. They're not worried about license fees, who pays the taxes, where the withholding is. Those are 3 to 6 months of tax advisors going through cycles and cycles that you'll have to be part of if you don't have this simple structure in place.
So just a couple of questions here which have come from the audience. The first question, Anil, is typically when a company restructuring happens, and so let's assume you have an India entity and then you decide to restructure your company so that you have your holding companies in the US. You have two options. The first option is your existing company becomes a fully owned subsidiary of the US entity. The second option is you basically, kind of start a US entity, start a fresh India entity. The US entity wholly owns the India entity. And this company that you have, you basically shut it down and there is a slump sale of assets that take place, right? I know, between these two cases that I described, there are a lot of nuances involved. But broadly, Anil, any thoughts on, when you should make the existing company a subsidiary versus when you should have a new subsidiary and, have the existing company die down a slow death over a period of time?
Yeah. So firstly, the emphasis is that at the end of the day, you should end up with this structure.
Makes
Whether
sense.
you go from left or right, this is the structure you should go for. So whenever you, as a founder, you're working with your advisors, you should make sure that everything's structured in a very simple manner where everything is in the US side with an India subsidiary flowing over to the US and then growing in the US. How you get there obviously is facts and circumstances, right? So the short answer, I don't want to be flip, but if you can do it as a straightforward transfer, then that's the easiest. Because it's easy, faster, cheaper, quicker, I guess faster. And why would you create another company? And slump sale is still subject to review of valuations, various things. I would certainly recommend that as much as possible. It goes into timing. What have you done in the India company for the various period of time? What is the valuation of the India company shares? So, for example, if just the two of you created an India company and you haven't done much, you haven't filed patents, you haven't raised money, you should be able to sell those shares to the US company. So US company becomes an owner and parent of the India company for a very little, sort of the same 10,000 rupees that you paid with no tax implications. And that can be done in a week or so, right? That's the easiest. If you have on the other side of the spectrum, if you've raised a bunch of, series financings, file patents, have millions of dollars in revenues, then you have to look at other options, right? Just flipping into and paying millions of dollars to the shareholders in India to buy those shares. And for them to have to pay taxes on those, that would not be a very feasible option.
Got it. I think we got a couple of questions. One is, what is the best option to create the best option, I presume, Anil, is to create a US company first and then the India and the subsidiary in India.
Correct.
Right?
Correct.
And if your company is really early, then you can look to make the Indian company a subsidiary of the US entity. I know there are nuances there, but yeah.
Right. But again, if you have an India company already in place, they're both ways are fine, right? You create a US company creates a subsidiary on day one. That's, if you don't have an India company already in place, that's the fastest route. But if you have an India company already in place and the value is not high, then that saves the requirement to create a new company and all the back and forth. And sometimes, like the India sort of MCA website was down for 2 months of this year, So it would have saved you that trouble of having to create a new company, right? And we actually started creating shell companies that our founders could just pick up and start doing because there was all this mess with delays. We've stopped doing that. I don't want to get into any, I don't want any circulars from RBI coming up, but the fastest, simplest route, right? That's what we should take.
The other question we have is from a few founders who have actually, they have a, India subsidiary and a Singapore holding entity. They say, what is the difference when you want to flip a Singapore company to a US parent, right? With the Indian subsidiary, and how different is it as compared to, flipping an India parent to a US parent?
Yeah. So certainly it's easier than India because, again, depends on what you've done. If you have IP value, all of that, you still have to go through it. And we've done a few of those in the recent past. But it's easier because you're looking at any tax implications of share ownership in Singapore, which is a much more tax-friendly jurisdiction from that perspective than India. The only thing you have to concern about if you are as a founder still sitting in India and you did whatever ODI you did to buy your shares in the Singapore company, now you're exchanging those shares. So that complicates the ODI implication, right? If you did that before August of last year and received shares as a gift, and now you're getting shares in exchange in the US company, that will create ODI complications. You'll have to go back and report to RBI and maybe get some sort of compounding. So on the India side, it can become complicated. On the Singapore to US side, it can be done on a tax. You can do a share exchange on a tax-free basis in most regards.
Got it. And for the unversed, because we have people from across the spectrum here, ODI basically stands for overseas direct investment.
Correct. And that's where, that's basically the regulations that govern everything we're talking about today.
Absolutely.
Okay. So here we are, it is one of my pet peeves. I think we've talked about that already. And angels are angels until they become devils, right? And becomes every stage, I can promise you that you have an angel or even your Series A investor that's not leading the Series B, you will have to manage Series A expectations. So similarly, the angels that are coming in are your best friends because they're the ones writing your first checks, and you have to respect that. They took the biggest bet on you. But you have to be careful about who you choose, because most of the angels, thankfully, now are getting much better because I guess it's more public, and it's they're also worried about their reputation. There is now competition for investors. Uh, Earlier, when I started, this whole concept working with angel investors in India, it was a handful of angel investors, uh, and they control everything, right? They give you the terms, and it was take it or leave it, and usually you took it. Um, and it was even for I mean, obviously numbers have changed, scales have changed, but for like 100K around, I remember an angel fund that used to call itself, let me say it, Indian Angel Network. It was maybe 200,000. It was a 10-page term sheet, for closing that round. Again, 200K in 2010 was a lot more money than it is today, but you had to, as a founder, go through the whole kitchen and sink. Every pencil you bought, you had to go back, all of those things, right? So you want to be careful back. And if you are flipping that entity over to US, you have to deal with all of those things. And a lot of that baggage, then you have to push very hard to give up on the India side. You don't want to bring it on the US. It will complicate it. It'll complicate my job. I'll charge you a lot more. It'll take longer. And as you grow the business in the US and start looking for US investors, the US investor will have a conflict, right? They will want you to also get rid of this gap, this baggage you're bringing in. But if your investors are not willing to, then they will want to be part of it. And now you've created a big mess on your head that you have to it's a ball you're carrying for the rest of your life of the startup. So if you have to take investors from India, which is fine, there are now, I would say, majority of investors, funds, angels are very good, high quality investors, and very supportive of the flips and growth. But just do your homework most importantly.
Got it. We have another question coming in from the audience, Anil. Basically, I mean, typically, whenever a exit happens for a company which follows a US holding entity and an India subsidiary, whenever an exit happens, do both the main holding entity as well as the subsidiary exit together to the acquirer? How does that happen? I know it could be
So that's why
that's
why it's important to understand the keep that structure in mind, because every time you sort of fall off, you look at where you are, right? It's a simple US company, Indian subsidiary, your shares are in the US side. So if there's exit happening, assuming that's an exit of either a public or someone buying the shares, you as a shareholder are selling your shares to Google. Google is buying and paying you money. And if you're an Indian resident, Google will pay that money into your Indian account, and you pay taxes, capital gains in India. You report that as capital gains, and that's it. So Google will buy out the US company. The US company owns 100% of the India company. So automatically Google becomes the owner of the entire structure.
That's got it. Fair point.
Yeah, so this again, as I said, I'm not just a lawyer, I'm also friends with founders, and and as part of this process, we run into this. I should add about Indian bank accounts as well, but founders tend to somehow complicate things or look for, it's like a challenge, right? I mean, when they start a company, you're dealing with the technology, but when it comes to legal, you want to also solve. A lot of founders tell me, why don't you use this tool, that tool, blah, blah. I'm like, dude, I have been doing this for 25 years. If there is a tool that I use, I will know how to use it, but more importantly, why don't you listen to your lawyer and do what you need to do? There is these neo banks, all sorts of things. They look so attractive. They have great terms. The marketing is great. The UI, UX is great. A lot of those don't work for US, India. The wiring of money from one account to a New York account to India, it takes weeks to figure out who's responsible for giving the code and whatever it is to report that the money coming in. If I can tell you, if you're wiring $100 and some bank takes out $25 because that's their process, and you get $75 in the account, it will take you 6 months with RBI to fix that problem. If the
Mm.
shares are valued 100 and the shareholders get $75, it'll take you easily 6 months to fix that problem. So you've got this fancy bank, but it's not working for you. Many of these fancy banks have limits for foreign transfers. Some of them, I'm not going to name anyone, but some of them you can't transfer more than $1,000 a month or something like that outside of the US. So don't just go by the marketing and click. Look at what works. This is not where you need to be fancy. You don't need to have a nice UI UX. You are not ever going to walk into a bank. It doesn't matter what the bank says, whatever their website looks like. There are banks we work with, others work with, who are set up. They have teams. Silicon Valley Bank, Bridge Bank are the two main ones we work with. They have teams that understand this. We have teams within Inventus and those banks that work together. Boom, boom, boom. It's a process. Other law firms, again, I'm not saying just we. Other law firms in Silicon Valley, if you end up working with, will also be working with those banks, right? Because of the nature. They're not going to be working with the big Bank of America's, Chase, whatever it is. So give yourself, make yourself do yourself the favor of using that process. If you want a fancy bank for your own personal credit card, whatever, do it, but don't put the company's process at risk or complicate it because you like the advertisement or the, whoever, whatever they're selling. The other thing founders make a mistake on is, for ODI process, very important that everybody comes through. And this is the government in its infinite wisdom decided, for whatever reasons, they really want to control and manage and really figure out. And this is, I think, a way to come after angels with tax notices to figure out who's investing how much. But the short of it is, you have to, if everything now, after the new regulations, all the investments from India, either founders, angels, AIFs, have to go through ODI. AIFs have to obviously go through SEBI, but have to go through ODI. And you have to follow that process, which includes that the company has to have one bank and a UI number with that bank, and all angels. If you have an angel that has a bank account with Bank of Baroda, they cannot transfer the money from Bank of Baroda. They have to transfer from Bank of Baroda to the company's account to the US company. Otherwise, you're out of compliance, and again, you're completely off track. So please understand those things. Whoever's advising you, please follow that advice. And if your angels don't get it, close the loop with the angels. Otherwise, you are the one who will have to still deal with the consequences.
Makes sense.
Yeah, I don't want to just, yeah. So I guess as I say, a good guy, just because, your friend is a good lawyer or friend's brother is a good divorce lawyer or even an Indian corporate lawyer doesn't mean anything, right? Because you're dealing with a very different, I'm not the smartest lawyer there. I'm not, I didn't go top 1% in Harvard. Although I did go to Georgetown, but I've done this enough, right? That's what counts. I'm not related to any of you, but what counts is that when you come to me, we as a team have spent a lot of time to figure out the minute details, right? Who will do the notarization, apostilling, even the office addresses, all of that, because this is what we do for a living on both the India side, US side. We've gone through details and process, and then there are other firms, a few other Cooley and Goodwin, whoever, they've done that. So just work with those. There's no point in trying to figure out new law firms sitting in LA or Chicago or Minnesota, again, because they have fancy websites or some friend used them. If a friend makes a referral, and this should be across the board for founders, if a friend makes a referral to you, the first thing you should ask the friend is, where are you in the process? Did the friend ever go through diligence, raise financing, go through this whole process of creating it? And then is the referral that you're making to, have they done that over a period of time? If not, then they could be really fancy, they could be top of the class, whatever, great resume, but they're useless for your purpose of what you are creating.
This is so very true, Anil. And I'm telling you, this advice that you have given is very, very deep, because this is something I have also experienced as a SaaS founder, right? See, at the end of the day, you can take advice from anybody, and everybody in the world loves to give advice, right? But as an entrepreneur, right, I have always realized that the best advice that I ever got were from other fellow founders who had built something similar, and were few steps or many steps ahead of me, because they have gone through this phase, right? They have gone through this phase multiple times. So the advice was always, kind of more often than not really, really relevant, right? As opposed to, kind of if I'm running a B2B SaaS company, if I go and ask advice from a consumer internet founder, yes, to an extent, by and large, general principles will work. But beyond that, whatever he will say will actually not apply to me, right?
Correct.
What actually, applies in your entrepreneurial career, right? Also applies when you're actually trying to take legal help, when you're trying to structure your company. Because there are people who do this day in and day out for a living, people who have expertise in this. And it's always good to, kind of directly go to them, approach them and get this done. Because I always believe that, uh, legal and finance are two massive custodians of your organization, right? They try to save you, they try to ensure that you're on the right side of everything. And if something goes wrong there, then it's actually a point of no return.
Yeah.
So you are better off, going to a proper, seasoned advisor who knows this, who does this for a living, who has done this day in and day out, rather than rely on hearsay, rather than rely on some friend of yours whom you really, kind of like, you hang out with, etc., etc. I mean, you have to draw a line there.
Yeah. And I would say that, the best advice you can get from the founder, especially, is not what to do, but what not to
Or
do.
what to do.
Because
Yes.
the mistakes they've made would have cost them a lot of headache, time, opportunity, cost. And you can save all of that by learning from those mistakes, right? And that's what you should seek from other founders you are talking to. Hey, the first question you should ask a founder, a SaaS founder who's built something similar, is what are the top 5 mistakes you made? And how can I learn from that? Instead of saying, how do you raise money? Can you introduce me to your investor? Those are the things you should say. Hey, even if it's, what is the biggest mistake you made? And how can I learn from that? How did you fix it? That will save you a lot more than anything else. All the garbage advice you'll get, because you're right. I mean, you ask anyone and you ask 10 people, you'll get 20 different pieces of advice. But you ask specific question, and learning from other people's mistakes is the best value, learning for you. And of course, the part of that is the legal structure you followed for your business, who helped you, how did you get there? All of that, I think, is priceless.
I have another question coming in, Anil, and I know this is slightly specific, but I don't want to, ignore these questions. So I'm just, sharing it with you. The user says, I'm a LLC California company, a SaaS company, and I have an India company that is private limited. Both these companies are separate and not related to each other in any way. Can I convert to California Corp, or do I need to create another Delaware C Corp?
Yeah, again, sorry, but this is an example. Like, I have no idea how you got into an LLC. I have no idea how you got to California. I don't know if you know how to do google.com. Simply put, I'm sorry, but this is where I have zero sympathy for founders, right? At this point, if you're a SaaS founder, wherever you are, you could be sitting in Baroda. You ask a question around you, people with, Delaware C Corp. Everyone in India knows Delaware C Corp. Nobody, including me, have ever been to Delaware, but everybody knows Delaware C Corp. And if you're sitting in India and you're spending so much of you've given up your job, your family is waiting for you to get married, and you are doing all of these things. Everyone's like holding their breath that at some point you're going to be successful. And you fucker, sorry, but you are creating a California LLC. What the heck is wrong with you, right? Let me be very honest. How did you get there? Why? How did you miss something as basic as that? To whoever it is, please understand, I'm just trying to help you to change your thinking. And all of this, what we're trying to do with this conversation between Srini and I, is to make sure you understand that there is a path laid out. It's very easy. Follow the path. Don't complicate it, right? The short answer is yes, you shut it down. You also probably created it using your India fund. So you're already out of compliance. Or some CPA filed it and you paid that CPA and nobody's talking about it. Whatever you've done will not work. Shut it down. Go back to the structure we've discussed. And it's not just India. Every company that you want to aspire to be, Apple, Google, Facebook, Oracle, Uber, all of those are, guess what? Delaware C Corps. So you sitting in wherever you're sitting in have decided that, hey, those guys have no idea. I'm going to create the best model for this business, which is going to be a California LLC. That's how foolish that sounds, right? So please don't do that. And if you've done it, please learn very quickly, shut it down, create a Delaware C Corp.
One of the reasons I really respect you, Anil, is because, you put things in a very, very raw and unfiltered fashion. And that's how, we entrepreneurs understand, how to get things done. So I really appreciate your, candor here.
Yeah. No, I deal with, how do you answer that question, right? And if you can't shake that person into like waking up and doing simple stuff, right? You're
And
not doing them a favor.
a sense of urgency to, correct things.
Correct.
And,
But as I said, I mean, this is, how do you miss that? I mean, I can understand 20 years ago, but today, how do you miss that, right? And what were you thinking that something that, when Google started and whoever now started, Databricks started, and whoever is going IPO, all of these companies have been set up for Dell. Why they're Delaware C Corp? I can have a thesis on that. You can Google it. But the fact you need to be Delaware C Corp is just undebatable.
Absolutely.
Okay. So I think we talked about this earlier, alluded to it. Founders, again, they're busy structuring, and then hopefully they've got to a structure legally. I just met for coffee one of my clients, great company. He's going to be raising a bunch of money, has customers, and I've been pushing him. Hey, get your visa, get your O1, and he literally has a 15 million term sheet. And one of the things that investors, and these are not India investors, don't understand India. One of the key things is, hey, we didn't realize you're not you're not here, you're in India. So how does that? They're going to now get an immigration lawyer to advise them. All of that could have been saved 12 months ago when I first said to him, get your immigration process going, right? Again, if you're a SaaS company founder, if you've decided your market is global, your customers will be here, at least one of you, if you have multiple founders, should start thinking about seriously considering moving to the US. Now, it doesn't mean you have to move today, right? But again, look through the various options. You have an L1, H1, O1, investor visa, founders, entrepreneur visa, which nobody talks about, surprisingly, which is not that difficult. And it's actually available for founders that raise, I think, $250,000 or $300,000 and can very easily process. But in any case, that process of looking for your immigration and preparing for that, there's so much information. There's so many founders now. When you come for your SaaS Boomi caravan, connect with other founders who've gone through it. At least by the time you go back, you should have a plan that you are qualified for X or Y, and what are the information, what are the things you need. For Owen, for example, you need to start building your resume, your public profile. Why wait until 6 months, 12 months when you are ready for the investment? Because that will take another 6 months. Why not start that process today and be ready at the right time? So it should converge where the company is doing well, starting to get customers. Now you've got a term sheet from a big series investor, and guess what? Your visa is coming through at the same time. That would be a beautiful world, that we can create. So don't ignore these simple things. Learning from other founders. Most founders I can tell you that you talk to who are here, have made the trek in the last 5 years, will tell you that one of the biggest mistakes they made is they didn't think about the immigration early enough. Or sometimes, if you have family where their kids will go to school, the cost of real estate in India, in Silicon Valley, is pretty high. And one of the reasons is the school district, right? And given our culture, we want to be in good school districts. We want to make sure our kids have the best education. These are non-legal, non-tangible things, but these will add to the process. Either subtract from it, because now you're spending a lot of time just trying to figure out Cupertino, Saratoga, Pleasanton, Dublin, whatever, where these are, after you made the decision and maybe when you've raised the funding or have a term sheet. Or that's a process you can start now if you're starting your venture today. It's easy enough. SaaS Boomi has done a great job of putting an ecosystem together in India. Wherever you are, you have founders around you that or should very easily be able to connect with, that can help you with what they've done. Again, what mistakes they've made, what are the things they would prioritize, learning from their experiences. When you are here as part of the SaaS Boomi, they've done a great job of bringing all sorts of founders. Connect with them, learn from them, ask them specific questions about stuff like this. Where did you live? Where is the apartment? What kind of food? Whatever it is that will save you, because you have 24 hours in the day. If you are going to come in and then start spending 15 hours trying to work on your logistics, that is 15 hours less that you can either sleep or work on your startup. It's simple as that, right? You have to be ready to prep, if you move to the US, if you're in India, you can come on B1 against some limitations, but you have to be willing to travel back and forth with your customer visits. If you move to the US, it's very possible that your customers will be in Atlanta or New York or Chicago. You have to be ready with a bag and ready, so just mentally prepare to, and traveling in the US, I can tell you domestically is a pain. India is a breeze, in the airports, all of that is easy. Traveling in the US is just logistically, the service levels, all of that is just a pain. So just be prepared for all of that, mentally also.
Yeah, I think, and what I have realized, right, crisscrossing the US, the distances are so huge
Mhm.
within the city, as well as within different states. Like if you have to travel from SF to West Coast to New York, the East Coast, I mean it's a 6-hour flight,
Mhm.
right? That's huge.
Yeah.
I think the longest flight in India would be what, 3 hours between Chennai
Yeah.
and Delhi or something. So
Yeah.
the
So that's really 3 hours, but also, I think you make a good point. Also within the city, right? So
yeah,
if you're moving from wherever you're moving from, because your customers are in Palo Alto, and if you find a place in South San Jose or Dublin or up in San Francisco, that's a 1 hour one-way commute you're committing to, right? And is that really worth it? I mean, again, all of this, whether you decide one or the other, doesn't matter. That's information you have available where you are sitting with the founders a lot of founders have moved back to India, so you will have those. A lot of founders have moved from India to here, and you should be able to access through your engineering schools, your ecosystems. Start that homework right now. If you do move, where will you stay? All of the things that we did as students, if you were moving to a college outside your city, all of those things apply, and if you have kids, obviously there's even more things to consider and get ready for.
in
Yeah.
fact, the best example I can give is not actually a B2B SaaS company, but you guys yourselves, right? The partners at Inventus Law, they travel so much between US and India, right? Every time I'm in India, I see, either you are one of the partners in the Inventus office in Bangalore. And whenever I'm in the US, I see, I'm able to meet you or somebody from the India team here. So if a legal firm which is supporting all these companies cross-border, the people in that legal firm can travel, and they set an great example for us also, right? So yeah,
Yeah.
absolutely, bang on.
I mean, I'll give you an example, right? I mean, I've been very fortunate because I have a home in India and I have a home here. So it's easy enough for me to, logistically. When I travel, I travel with just my laptop because all my clothes are there, my set of shoes, my even tennis racket, everything is there. So I just literally plug and play, right? Similarly, when I go to Bangalore, and a lot of friends, clients make fun of me, I stay at Ritz-Carlton, and you think it's expensive. Actually, if you stay there so often, it's not. I get great service and everything set up. I get literally the same room. A lot of these things add value to your quality of travel, right? Because they know who you are. So just again, each of you is different and different, preferences, but consistency, right? I mean, going back to Steve Jobs, he used to like wear the same set of clothes just because that wasn't his goal, right? His goal was to be efficient and focus on what he needs to focus on. So what you should also get into the habit of, hey, what is the simplest way to get from point A to B? Because your goal is not the journey. Your goal is what you do after the journey. So you have to get it faster, cheapest, most rested, most efficient, most ready to, get working.
Yeah. We have one more question coming in, Anil, and while we are, we've crossed the deadline, but I knew that was going to happen because this was going to be a power pack session. So this question is, I'm a private limited SaaS company based in India. I'm looking for global expansions. I'm confused between setting up a US parent, which is a Delaware C Corp with India, uh, and a wholly owned subsidiary, or should I have two separate parallel entities?
Yeah, so the parallel entities don't work. I mean, to create a subsidiary, right? I mean, why would you have parallel? What is the value, right? Firstly. Secondly, if you have parallel entities, then you will not be able to issue options to people that you hire in India. Thirdly, your investors, when they come in, will require you because they're not going to invest in a US company and you have a team sitting here and there's no connection. They would want to invest in a company that also owns everything, the value, the team, everything that's been created in India. There's, no reason not to create it as a subsidiary from day one.
Makes sense.
Yeah. Okay. I think that's it. I mean, so then this, yeah, thank you.
It's been an amazing session, Anil. I learned a lot. We've gone through our own company structuring, and I thought that I knew this like the back of my hand. But today I walk away, and as I told at the beginning of the session, every time I meet you, I walk away slightly more enlightened, slightly more stimulated, and today was no different. I think we've crossed the hour mark, so I do feel that the whole last 60 minutes was a breeze. There's so much we learned. It was a power packed session. Thanks a lot, Anil. And as I've always told a lot of founders, that we spend a lot of time in building the product. We spend a lot of time in trying to sell the product. We break our heads around it. We split our hairs. But what we generally tend to miss, and that's because most of us are either engineers or salespeople. What we generally miss is these basic stuff, the foundation of the company itself, right? And as you rightly pointed out, if your foundation is weak, if your foundation is inefficient, it doesn't matter what you're trying to build on top of it. You might build the most beautiful house, but if the foundation is weak, no realtor is going to kind of touch it. No person in the world is going to buy it. So getting this right, getting all your i's dotted, getting all your t's crossed is actually, I wouldn't even say an option. It is mandatory, right? Otherwise, it's just going to come back and bite you really bad in the future. And all the effort that you're putting in to build the company, all the effort that you're putting into scale it, all the effort that you're putting into, kind of satisfy your ambitions of going global, they'll all come to naught if these things are not, uh, not there in place the correct way. Uh, Thanks a lot, Anil. I think, as always, it's been an absolute pleasure talking to you. Uh, and getting all those nuggets of information, all those nuggets of wisdom from you. uh, and today I'm really happy that it was not a one-on-one discussion, but it is something that could be broadcast to so many people who've joined in. uh, I'm sure all of them walk back slightly more enlightened, slightly more stimulated, and they'll all probably start thinking more about putting the right structures in place for their companies to go global. Thank you again.
Thanks for having me, Srini.